So Dave, some big words in your newsletter this quarter. Sales are way up, skyrocketing, I guess you say.
Yeah, skyrocketing.
So what's happening?
Well, we've been talking for the last year and a half about how, after going through 5 years of kind of unprecedented difficulty, the market's been kind of turning around. And of course, last year we saw a nice improvement, but I wouldn't have called it explosive. This year, the first half has really been kind of explosive. It's just been manically busy, particularly in the spring. April and May were just off the charts in terms of offer to purchase activity. And if you were to project out what we've closed for the first 6-7 months of the year, out to the end of the year, just kind of sort of based on a normal seasonal pace, we're going to end up with the third best year in Dane County history in terms of the number of sales.
Shocking.
Well, it is kind of shocking. And it's fun. A lot of people come up to me now and say, I bet you're really enjoying this. And we are. There's no question about it. And I know that home buyers and sellers are enjoying it too. It's a much healthier and better environment for everybody. But the question, of course, is this normal and sustainable? And what we don't know, my best guess is that we might well see things throttle back a little bit, maybe even the second half of this year, and the 2014 may well not come quite to this level. I think there are two reasons for that. Number one, there's a lot of pent-up demand for the recession.
Sure.
A lot of people are sitting on the sidelines, for better or worse. Now they perceive that things are improving, and so they want to get back in while the getting is good, before prices go up and before interest rates go up, and that's the second piece. Interest rates have been historically low for all of the last year and a half, and even early this year they were in the low threes for a 30-year mortgage. So those two things, I think, combined kind of supercharge the market a little bit. Now the question is, will that sustain? And of course, I'm going to guess your next question is, what about interest rates?
Well, right, we're going to talk about interest rates, but also the other factor that I see out there is rental prices.
Well, yeah, rental prices are an interesting thing. Vacancies have been the lowest that we've ever seen, and that rental markets are very local, of course, very, very, very local. Even more so in some respects than housing markets, although they're very local too. And in Madison, in Dane County, what we've seen is we saw almost no new apartment construction for quite some time.
Right.
Now we've seen Epic as a major employer of literally thousands of younger people, many of whom are looking to rent for a few years rather than buy. And so we're seeing a kind of an explosion in new apartment construction. So what that will mean, time will tell. I've been asking a lot of people, are we getting overbuilt apartments? And they all think no. They think that
the prices are certainly not low in those
So they're not. And that's also, I think, to your point, bringing us to a situation where a lot of people are seeing buying as a very affordable option. In fact, let me just kind of jump to affordability for a minute, because that's always gets to be a question when interest rates are on their way up. Is affordability going to be impacted? And so far right now, if you just do sort of, the National Association of Realtors does kind of a quick and dirty little index called the Home Affordability Index. And it just measures whether the average family at the median household income can afford the median priced house at today's interest rates with a 20% down payment. And the answer is that their income is still 55% more than they need to qualify.
Which is great.
So we're nowhere near reaching a point where affordability is an issue. Now the question is, what's going to happen with interest rates and where do we go going forward? And of course, everybody knows that interest rates went up by about 100 basis points earlier this year.
Right.
What was about a 3.5% mortgage is now a 4.5% mortgage. And now the Federal Reserve is talking about maybe tapering a little bit more.
Up they go.
And so interest rates could go up a little bit more. We see that as good. And I really want our listeners to understand that, because so often when anything like this happens, the media immediately jumps to, oh my gosh, interest rates are going up, what's going to happen? Well, interest rates have been so artificially low for so long, and everybody knows it. There isn't a thinking person out there who doesn't believe that interest rates will eventually go up and that they need to go up.
Right.
So the sooner we get there, the better, and they will go up when the economy is strong enough to support it. So when rates are going up, the economy is strong, and I would much rather have a strong economy underlying my housing market than a manipulative Fed that's driving interest rates down and distorting the marketplace. So I think this is a very good thing. And so far we've seen no impact in terms of demand, really, as we sit here in mid-August. So things look good.
So for sellers, Nirvana yet, or is it what's
Well,
the market?
it depends on
Prices,
where you-
prices haven't changed
No,
all that.
no, prices have not really changed
Right.
that much.
Which
They
is
really-
fascinating.
It is fascinating because we still have very low inventories.
Right.
Single-family inventories in Dane County are still around 4.5 months, which is very low. Not historically low yet. We were down in the threes for a while 10 years ago, but still low by any measure. So the likelihood is that prices will slowly begin to rise as we go forward. If you're in the city of Madison, particularly in some of the desirable neighborhoods, yes, it's nirvana. I mean, you can put the home on the market and they sell very, very quickly, often with multiple offers. It seems that the further we go out from Madison, the slower it is, honestly.
Sure.
We are starting to see some movement. I know that the Stoughton market, for example, has started to really pick up. We're seeing good activity there. So some of the Sun Prairie, some of the moving a little bit further out now are starting to move better than they were even a few months ago. Sauk and Columbia are still a little bit sluggish. So when you get outside of Dane County, we're not seeing quite that explosive demand. That'll come. I think that this has just been very much of an inside-out sort of a recovery. And eventually, as they work through their inventories, it'll get there. So it depends on where you are as to whether it's nirvana or not. No question, a seller has a reasonable chance of selling their home in a reasonable period of time now, which was not the case a few years ago. So we're very much back to normal that way, and that's great.
So buyers still pretty good rates. I mean, historically.
Buyers still have an opportunity.
Yeah.
It really is kind of a Goldilocks situation here because sellers can get their home sold. The biggest thing buyers have to realize there's going to be a lot of competition, particularly if they're looking in desirable Madison neighborhoods or near central Dane County type neighborhoods. So you do have to be somewhat more aggressive now. It's not a situation where you can just throw in a lowball offer and the seller will take it out of desperation. They have choices now. So if you want the house, you're going to have to pay what it's worth. But you still have reasonable prices and you still have very, very low interest rates. So think long term. Don't get all hung up on short term things. Think long term. It's still a great time to buy.
So are mortgages getting, let's say, less of a hassle for buyers, or are we still having lots of hoops?
A little bit. The process is still much more difficult than it was 10 years ago, and in many ways that's a good thing. 10 years ago it wasn't difficult enough. We saw what that led us.
That's right.
So we don't want to go back there. There's always a tendency to overreact. I think for a few years there, regulators were too tough. But it's still evolving. The Dodd-Frank bill is still being implemented. The implementation has been delayed. It's been somewhat clunky. A lot of it is probably unworkable from what I hear and talking to a lot of lenders. So there's still evolution and there's still some uncertainty around the process, which makes the process more difficult than you'd like it to be. That said, rates are low, and if you're a good credit-worthy borrower with a good down payment and you're not trying to buy at the absolute outer ranges of your income, you should eventually get there. It's just, but the process to get there may be a little difficult.
So then finally, looking ahead, you could keep an eye on the trend watch in the newsletter. It gives you some indication where you think things are going.
Well, I think we're looking at slowly rising prices over the next few years, which is healthy, as long as it doesn't really much exceed the rate of inflation. I also think we're looking at interest rates that will level out in the 30-year fixed rate somewhere in the 5.5% to 6.5% range. We're at 4.5% now. I don't know how long it'll take us to get there. It may be later this year, it may be next year, it may be the year after. We'll just have to see. But people should think in terms of that as normal. Beyond that, I think the market is looking very healthy and very stable. And next year, my guess is that we might see a little bit of a downtick in sales. But again, that's not a bad thing. It's just kind of selling into a more normal pace. So it's normal again. Feels good.
Well, hopefully we'll talk about the new normal next quarter.
That would be great.
Thanks, Dave.
Thank you.